Good afternoon. Dear listeners, welcome to Šiaulių bankas meeting with investors. I'm Emilia from Nasdaq Vilnius and I'll be moderating today's event. We will start with a presentation from the management, which will be followed by the Q&A session. Please be informed that this webinar is being recorded. As always, I encourage every one of you to ask questions during or after the presentation in the Q&A section. With that said, I am pleased to introduce today's presenters, CEO Vytautas Sinius and CFO Donatas Savickas. Gentlemen, please, the floor is yours and good luck.
Good day, dear investors. Welcome to the webinar of Šiaulių bankas for the first half of the year results, and thank you for your time and dedication of exploring results of the bank. Truly, despite the waning challenges and the period of high unpredictability, Šiaulių bankas results demonstrate, I would say, rather solid performance of its core activities. So on the slide, you can see the first half results, and I'm pleased to announce that the net profit has been at the level of close to 30 million euros. And despite, I would say, moderate net profit growth of 6%, if we compare the half-year results with the same period of 21, the operating profit has increased by 27%. And as you can see in the graph, there's without any one-off effects, and that means that has been generated from the core business and sustainable business of Šiaulių bankas. Also worth mentioning that we experienced growth both on a corporate and a private client financing. So performance pretty strong, we can see on the later slides. Despite the growth, we also observed a strong and continuously improving quality of the loan portfolio. Another focus of this period was in a digital part, so we implemented several functionalities for the private and corporate clients on a digital channels. And last bullet point, mentioning the latest developments related with changes at the shareholders level, that in a recent shareholders meeting, the new supervisory council members has been elected. Of course, they need to obtain the ECB permission for the role to be in full capacity work as a supervisory council members, but they will join shortly the meetings of supervisory council, and they will start to provide the input. From the key performance indicators, as you can see, they're all in a target zone or even higher. And for instance, return on equity, I'm happy also to mention for the first half, it's close to the 15%, our long-term target that we are seeking, and other parameters also better than our year-end targets. Of course, the year is not finished yet, but anyway, half year already has passed. Okay, so let's move on to the macroeconomic situation development. And yeah, probably we can see that this is one of the most interesting and challenging periods in the last decades, when, from fighting pandemic, now we are moving to the extremely high inflation worldwide, not only in the region. Also exiting the negative interest rate environment, and therefore, as a bank, we are looking for the solid risk management tools to work properly with the risk in this turbulent period, and also to use the opportunities that we can use going forward. So looking to the freshest figures of the GDP, we see the 3.6 increase in the first half of the year compared to the the same period in 21. However, a slowdown has started, and this is probably not a surprise. And the projections for the most of the economists has been in line with the actual figures, that we have negative 0.4% decrease in the second quarter, and the projections that the third quarter also could be with a negative growth. So technically, we can say that it's a recession mode, but that's probably more on a technical evaluation. We need to go deeper and understand how that microeconomic dynamics will influence the practical businesses and households, and then we can see how it will impact the bank as well. So if we would have a smooth soft landing, that could be even beneficial for the bank. If it's a medium, I would say then we have probably neutral effect, and if the landing would be much harder, then it will be also less favorable for the bank too. With if inflation if unemployment starts to grow rapidly, and also bankruptcies, and the business confidence is also on a negative trend. But it's still hard to predict, so probably a number of microeconomists would discuss how the situation will develop further on. But the current trend, even starting to look to the third quarter, beginning of the third quarter, we don't see the major impacts yet. The only thing, this is some lower consumer sentiment and the confidence of business we can observe, but still nothing drastic has happened. From the inflation point of view, we see probably the peaking inflation in July, and if we calculate excluding energy prices changes, inflation could be mentioned as starting to decrease. Okay, so let's move on to the business of Šiaulių bankas, talking for the main part of our activity, loan portfolio. So strong growth, as it was mentioned, strong half-year result, and also the quarterly growth was in all segments. So all corporate financing, consumer mortgages, and other loans on a yearly base grew double-digit figure. The composition also shifting, so we have increasing mortgage part, which already close to 1/4 of the portfolio, and corporate financing is slightly decreasing, and the percentage is now 54%. So sooner or later, the portfolio will be even more balanced with a private and corporate structure. So as I mentioned, the development of portfolio is pretty strong, and we have to review our risk appetite for the growth, and we use this opportunity both on a corporate and a private client lending to grow faster than it was projected at the beginning of the year. So 23% growth year-on-year basis. On a quarterly basis, it's 6%. On a year-to-date, it's 12%. So overall, I would say very strong performance in the loan markets. And the market share also increased, not that much as compared to our growth, because the market grew as well, so 17.7%. If we take the first quarter figures, the 17.7% growth in the market. So as a Lithuania, overall lending activity was pretty strong at the beginning of this year. Okay, let's drill a bit deeper to the segments. So when we touch the corporate financing, the growth was not that aggressive as overall growth of loan book. So it's a 5%, still pretty strong quarter. and year on year it's 14%, with it's a rather stable margin despite the growth. So the competition is not mainly on the price, but on the service and just working properly with the clients. The amount of new loans signed was 9% higher, so we have a pretty good pipeline for the portfolio growth for the next quarter. So 210 million euros of new agreements has been signed during the second quarter, and also the trend of interest rate is positive. Talking about concentration, it continues to decrease. So we under 10% if we take top 10 positions of the bank. So the decrease of 1.1 percentage points from the beginning of the year. So it's another good point talking about diversification of a loan portfolio. As we mentioned last time, we did quite extensive exercise of our evaluation of portfolio in relation to the geopolitical situation, and we still observe that due to that, direct insolvencies of the clients is very, very low. Of course, we need to continue to observe and see situation how it develops further, also in light of the macroeconomic developments, but so far so good, I would say. And the bank's portfolio growth was mainly in the same level as the market grew, and our market share in this segment remains at the same level, approximately 12.6%. So private lending, mortgages and consumer financing, as you can guess, this is the strong development actually in both segments. So if we would start with the mortgages, so record-breaking quarter in terms of sales volumes, 69 million of new contracts has been signed in the second quarter, and that's 21% bigger than the second quarter in 2021. And the mortgages remain probably the most active element of portfolio growth, and thus further diversifying Šiaulių bankas portfolio. Margin remains stable. We would expect that it could start growing as the interest rate could start growing of a mortgage loans due to the Euribor development. It's on a positive side, so new repricing would come with some beneficial effect also on the bank's income. And the market share, due to that intensive growth, also increasing. And for the last known period of the, again, first quarter figures, we have close to 5% market share for the mortgage loans. Consumer financing, again, after a bit weaker growth quarters in the previous periods, we have pretty solid jump in the growth of the second quarter. And probably the sentiment in the market, rising inflation, also expectations of the clients to hurry up with some purchases and some investments that they are willing to do, made the growth quite intensive. And also we made some additional campaigns that reflected to the strong growth of the second quarter. So 52 million euros of new agreements has been signed, obviously with a rather stable margin. And so far development in the consumer financing is strong. Okay, let's move on now to the daily banking part. So that business I would call a bit more like a gardening. It's a bit slow and continuous growth of diversified services. So it's good balancing factor to the interest income. I would say overall development is positive. We have cash transactions also growing compared to 21, which was more weaker year, and in 22 we had some more turbulence in the market in the first quarter and also second, that inspired people to have more cash, and therefore cash activities were felt in our branches, as well as the post-COVID traveling and more movements of people for different reasons also increased FX transactions, and the cash it reflected on the cash income in our balance in our P&L as well. From digital retail services, probably worth mentioning that we just in May launched the online onboarding of a private and corporate clients, and that allows a much faster and easy way to onboard clients without visiting physical branches. And similar functionality has been developed also for the mortgage application. And one of the reasons of the growth of the second quarter in the mortgages is related due to this form of attracting clients. And due to that, we had actually the mortgage applications doubled compared to the branch. Of course, the hit ratio is slightly lower, since most of the clients are attracting, sending applications to a number of banks, but that expands the sales opportunities of the mortgage of Šiaulių bankas too. Savings, probably another topic worth taking much more better view in the future, because we are entering negative interest environment, and probably in the near future we'll see more positive development for those who are willing to save in deposits. But the previous quarter was also successful in the investment product sales, and securities brokerage growth also continues to be one of the fastest, and clients get used to more investment products than only the keeping cash or deposits at the bank. Credit cards and service plans also has a positive development quarter to quarter. Each quarter we have growth. So as I said, it's a slow business, growing slowly but steadily, and that income is pretty well diversified. Okay, and the slide regarding the client satisfaction, then sometimes we don't see that in our KPIs, and sometimes it's somewhere behind the scenes and not directly reflected in our financials, but in my view, this is the really important and key issue to have a happy clients, to have clients that are willing to recommend the bank for their partners and friends. So Net Promoter Score is one of the measures that pretty well reflects the sentiment of the clients. Probably most of you knows the calculation of logics of that, so it's related with the promoters and detractors, and the more promoters institution has, the more the higher NPS. So we've just recently made the NPS for the bank in 2022, and results are pretty strong. Our targets, internal targets, were slightly less ambitious than the actual results, and I'm really happy about that. So the overall result has increased from 72 up to 83, up to 83. And also on a slide you can see the splits according to the sales channels. And the first time we measured our updated electronic channels, including internet bank and mobile applications. And both of them have received, again, also pretty strong evaluations. So internet bank 82, mobile applications slightly less, 71. We have also feedback from the clients what they expect more to have in those tools. And this is in our pipeline. So I hope with a strong performance of our branch network, which, as you can see, evaluated highest of 88. Also, the remote center is working very professionally and provides good service. Our digital channels also will be part of the strong sales channels to our clients. By that said, I would pass word to Donatas to continue with the rest of the presentation.
Good afternoon, dear investors. So I will take further the remaining slides before going to a Q&A session. So talking about funding, so many quarters before, it was not very relevant topic because the funding was not an issue, at least for Šiaulių bankas. But as we approaching to the more balanced loan to deposit ratio, as you see from the information, we are close to 90%. And also as we entering the positive interest rate environment, so this topic become relevant, and we will see probably more attention from both from the bank people and from the you as investors in the future. So the actual portfolio, deposit portfolio remains stable, close to zero changes. Of course, term deposits continue to decline, but demand deposits grow. But as Vytautas already mentioned earlier, so probably some attractive offers for depositors regarding the interest rates we will be offering in the near future. What drives us to that? So one reason I mentioned this is balanced loan to deposit ratio, and another factor is liquidity ratios. So liquidity coverage ratio decreased down to 152%. So it's close to our optimum target, and therefore in the future it will be the topic for us to monitor more closely. What else should be mentioned? So regarding to repay or not to repay TLTRO loans to European Central Bank, we choose the option do not repay in June this year, because we found other more attractive opportunities where to use these funds, mainly to invest in the eligible bonds and taking the positive net interest margin. And in order to meet MREL requirements, what regulatory bodies set for all banks, including Šiaulių bankas, we are planning to issue second MREL eligible bonds this autumn, as we did last year. But of course, situation and environment is not as favorable as it was years ago. So regarding the size of this bond issue and instrument and target audience, it's still open questions. And of course, when we will take decisions, so market will be informed accordingly. We can move on the next slide about capital and risk management, and this is again an important topic when we get first questions from audience. So this question about how much free capital the Šiaulių bankas have. So probably I will start from the graph on the right side of slide. So you see the risk appetite, which is at the level of 17%. It was driven by the requirements from central bank, different buffers, and also requirements that arise from MREL, what I mentioned earlier. So without going deep down into details, so it is the threshold, we must be above it. So 17% is the minimum what is allowed to be. Actual figure for the half year was 18.1. So of course it does not include the interim profit, but this profit will be included if after audit, which will be performed after we finish year. But the difference between 17 and 18.1 is in percentage 1%, but in absolute figures, for your better understanding, is about 25 million euros of equity. That means so that we can take without any pain loss, unexpected loss of 25 million, or we can think about more dividends next year when we have to decide this. So but this size is such, and of course this equity allows us to fund our growth, and the loan portfolio that we see the quite impressive growth in the past several quarters, so it's funded by the equity. And you see that we have decrease from almost 20% at the end of first quarter down to 18%. In one quarter, decrease by almost 2%. This is because this growth of portfolio. So I would say there are no plenty of reserves that are not used. Coming back to the remaining graphs, so NPE continues to decrease. So it's how would you say, it still surprises a little bit that in this environment post-COVID, during the war and the geopolitical tension, high inflation, so this there are no signals, at least so far, that quality of loans is deteriorating. Monitoring we're very closely. And of course, the provisions for loan portfolio is built not after problem becomes visible, but trying to anticipate that. And that explains, how to say, development of cost of risk graph in the middle of the slide. So in the first quarter, after we heard news about war in Ukraine, so of course our prediction was rather conservative when we look back to from today's perspective, and the cost of risk for first quarter was 0.5. In the middle of year, after end of second quarter, we readjusted the assumptions, and we get some reversals. So total cost of risk for the first half of 2022 is 0.2%. Yeah, probably we can move on to the next slide. And what could be mentioned there, that bank stock is remain most liquid on the Nasdaq Baltic market, and the average daily turnover exceeds 500,000 per day. And of course, everybody noticed that bank stock remained cheap and relatively undervalued. It's good opportunity for new investors to enter, but what we see when we see following the list of shareholders, that you see approaching to 18,000 in number of shareholders. We see new institutional investor names which are disclosed, or earlier they were hidden under the name of custodian name, but they are disclosed and some new appears, and we are happy to notice that some exchange traded funds, so-called ETFs, are also joining shareholders list of Šiaulių bankas. There are no changes among largest shareholders during the second quarter. Of course, this process of EBRD selling their stake and new shareholders, including Invalda and MA Investicija, it's underway, but there are no other changes so far. Yeah, probably that's it from my side, and of course I will join answering the further questions from you. Thank you.
Dear management, thank you for the presentation, and indeed now we will proceed with the Q&A. But before that, I would like to remind everyone that you are welcome to submit your questions in the Q&A box of your screen. So let's begin, and the first question would be as following. What holds you back from announcing a buyback of Šiaulių bankas shares? What criteria on A, market conditions, B, Šiaulių bankas lending growth plans, and C, capital buffer need to be met for you to announce a buyback? And do you at least internally have an idea on when would be the right time to announce a buyback? Thank you.
Yeah, I can take exploring this question. Then it's a complex. It's not the simple one answer, and I will try to give a flavor on how we considering the development in that field. So, what has changed from the beginning of the year and the planning, seeing how the situation develops in geopolitical aspect and the potential growth, we were less cautious in relation to the loan portfolio growth. And actually, we experienced much stronger development of loan portfolio, both on a private individual and on the corporate side. And that requires capital. And so that's one of the reasons that we shifted our thinking that this is the right area to grow faster without being too aggressive either on the risk side on a pricing, as you saw in our presentation and in actual figures for the second quarter. And we will continually observe the situation, how it will develop on the second half of the year. If we have potential to grow, so we consider that this is the best way to utilize our capital and to continue growth. Of course, if the situation allows to do that without, as I mentioned, going too much in a riskier field. Another part is the overall geopolitical situation and macroeconomic dynamics and uncertainty in those fields. They makes us to be rather conservative, and that also checked with the regulator. They see the situation rather similarly, that this is not the best moment to consider some buybacks or dividends to be on an aggressive side. Of course, the year is not finished, and we will need to see how the situation will develop further, and then to make the final decisions. But in the near future, due to the reasons that I mentioned, and also keeping in mind that we need to obey regulatory and our internal capital buffers, we do not see that much excessive capital that would push us to consider buybacks as up. The small buybacks could happen that would be related with the obligations to the option programs for employees, and only after the decisions of ECB, which can exercise that and purchase shares in the market. But much more extensive buybacks program in the nearest quarter, we don't see the on a larger scale to exercise buybacks, we don't see the capacity to do. And that will be also the question related to the dividends, how much the dividends we would consider paying for the year 2022 after the year is finished. So that's the thoughts on that field, sir.
Thank you very much for your answer. Let's continue to another question, which would be, what is the additional income on interest expected by the bank from ECB raising the interest rates in the Eurozone? Could you please provide a sensitivity on higher rates? Thank you.
I'll take this question. So starting from the second part of it, so bank performs sensitivity according to models developed and improved every quarter within the bank, and estimation of this result of these models shows that increase of 100 basis points in interest rate would give positive impact to bank P&L in the range of close to 3 million euros per year. But this what models say, but actual life is more colorful, I would say, and from my past experience, life proved that it's different from the models. And it depends on how it will this interest rate increase from ECB, from Euribor will be transferred to the real life. So for depositors, for new loans, of course, the existing loans, they act according to the formula. So if base rate increase, so that means that ultimate interest rate increase for the borrower as well. But new lending, it will depend on the market situation. So whether we will continue to use the same margins adding to the base rate or not. So it will the competition will say. The same applies for how interest rate for deposits will act. So it's not mathematical exercise to add interest rate according how interest rate in ECB changes. So it depends again on the market, and I expect slower reaction to deposits compared to ECB rates. So summarizing, I would say that yes, it will give positive impact to the bank result in the mid time horizon, but how much it will be, so let's keep a figure close to this, what models predict in the range of 3 million euros.
Thank you for your answer. Then the next question would be, what bank is planning to deal with more than 150 million of accumulated profit, and why is it kept for years by the bank without any proper use?
Yeah, unfortunately, I don't see the who asked this question. It's anonymous attendee. But probably it was not very, how to say, deep understanding of the bank business. So yes, in financial statements, there are figure disclosed of accumulated profit, but this accumulated profit is part of equity, which allows a bank to grow and to finance it growth, including loan portfolio. So during my presentation about capital, I mentioned that our current capital level, including accumulated profit, gives very little space for maneuver to how to use this. It's an additional buffer to absorb unexpected losses, is a possibility to offer dividends, but its figure of this maneuver is not comparable to this 150 million euros. It's closer to 20 or even less. So it's no way that it's kept for years without any proper use. So I would disagree with such treatment.
Thank you. Could you please comment on what are the biggest cybersecurity threats for the bank?
Yeah, this is one of the risks that we're facing as an institution, being open to our clients and using different channels. So we're exposed to that risk. And I think this is the very close risk that is observed not only by us, but by other financial institutions in Lithuania and also other infrastructural or different type of other institutions that also could be attacked. So we've seen some state-sponsored DDoS attacks to us during the last period. And we get used to that. Actually, it's rather processes that we are having inside the bank, how to deal with that. We also upgraded our systems and protection related to that, and starting to use more advanced cloud-based anti-DDoS protection systems. So overall, I would say all those live real cases, they show the pattern of potential attacks of the bank, and with each of those, we are getting more knowledgeable and resilient to it. It is challenged, but so far I would say we've been able to tackle all of them without any major effect to either systems or our client activities. But the risk is around us, and we need to be alerted, not only we as an institution, but also the clients and the partners. And in many cases, we are announcing that the fraud prevention and focus on your behavior in the internet is critical for the overall security for the bank and also for the client money. So different type of attacks. I mentioned only one, but this is a number of different other opportunities to be vulnerable. But as an institution, as Šiaulių bankas, we pay a lot of attention to that field, and so far we've been able to deal with all the previous attacks.
Thank you very much for your comprehensive comment on that. And another question that we received would be, what is the bank's position on payments to Russia and Belarus?
Yeah, we have quite a consistent position related to that. Our task has been to talk with the clients and to ask them to reconsider the business models and to reconsider the partners and clients. And as a bank, we consider that we gave sufficient time to shift from the Russia and Belarus. Therefore, recently we've announced to our clients that we will stop executing transactions to and from the Russia and Belarus from the 1st of September. And except of course for some humanitarian and state related functions. And also we're currently in discussions with the government, financial crime institutions, and also banking association, how to deal with the transit question to Kaliningrad and how it should be treated. So this topic probably still open. It's not resolved, but I think all the institutions are needed involved, and solutions in that respect will be fine.
Thank you very much. What are the key drivers for the financials in the second half of the year?
Yeah, again, my turn probably. And I would distinguish three main parts of answering this question. One is operating income, which contains net interest income, fee and commission income, and trading income. So I expect further increase in all segments due to the increase of portfolio, due to, how to say, some stability and and sustainability in fee and commission part, and trading, which contains trading in securities, and also foreign exchange gain. Current results, at least during summer, show very good track record, and I suppose that it will, of course, when colder times will approach and tourism season will end, it will slow down. But in general, all three segments I just mentioned, so it will give, I expect, good or even very good positive effect. Second block is operating expenses. We feel pressure from the salaries, and of course we are not alone in this. All banks, all companies see that, and it's related with inflation. And in this part, we expect, negative impact to that expenses will increase, but it's planned increase. So we review salaries of the bank employees, and we will continue to the changing environment in the future as well. What else? So we are implementing projects that we are planning to do. In the beginning of the year, probably the start was a little bit slow, but it's seasonal, and we used to that during the latest history. So we expect further increase in expenses or other operating expenses due to that factor. And third block is the provisions. And this is, for the time being, I mentioned that this cost of risk of 0.2 reflect our current understanding of situation development. So if situation and status quo will remain as it is now, so we don't see any big changes in provision, except for the, if portfolio will continue to grow, so it requires additional provisions, even if there are no signals of deterioration. But of course, we cannot exclude that something bad, not on macro level, not necessarily on macro level, but on the particular exposures could happen. So I rather, realistic, and I think that it will be some provisions created in the second half of year. But summarizing everything, so I think that the second year will be close to the result what was in the first half, with the disclaimer for macro events that could affect us all.
Thank you for your answer. And could you please provide your explanation on the Šiaulių bankas everlasting undervaluation as compared to LHV or Coop Bank?
Okay. Surely there's a probably larger universe than only comparison with LHV and a Coop Bank, and there's a different of examples and different business models, and it's good that we have such players in the market to which we can compare ourselves and to look at what is the drivers of the valuations. It's not easy probably to describe 1, 2, 3 things that makes the overall difference and different evaluations. I would say probably we already spoke about that several times ago, but just to try to remember the elements that I would see as drivers for difference is first of all, it's a different market. Estonia investors and Lithuanian investors still have some different trends. So Estonian market-specific issues. Then the bank itself, of course, I would say the core and the much more objective thing is the different business models of Šiaulių bankas and LHV. LHV probably could be treated a bit more like a fintech, and then that's have some also attraction to that type of business model. Again, more practical element and more objective is the more diversified income structure than Šiaulių bankas. So this is the area we also seeing how to continue grow our commission income, and in our future strategic sessions we will focus on that field, and we'll discuss how we can generate extra income that would add some value additionally, looking to the bank's perspective. And from the core bank, it's even hard to explain. It's probably following some trends related with LHV. Of course, it's also well-performing bank, but I would not describe too much features that generate that valuation. So I hope I've covered those thoughts that in mind, just popping up, describing those two different banks.
Thank you very much. And could you please comment on how has war in Russia affected bank operations?
Yeah, again, broad question. I would say initially the impact was quite operational, I would say, with the initiation of a crisis management committees, the focus on the very operational things, how it could affect the daily activities of a bank. But when situation, I would say, has stabilized, if we can call that way, then the evaluation of the credit portfolio has happened. So we were focused more on that, but as well also mentioned during the presentation, so far we don't see any major elements related with that. The other element that impacted and still impacts bank is all the sanction management in a payment business. So it's not exceptional to us. It's mainly all institutions need to follow that and to do all the necessary things in order to avoid sanctioned payments. The only probably difference that we are as a country close to Russia and Belarus, therefore those transactions are much more sensitively visible for us compared probably to the other Western countries that has less of that pressure. Yeah, and probably again looking backwards, we don't see any major negative effects. Definitely there is not so much positive things that has happened out of this conflict. The only thing that reorientation again of the businesses to the more developed and more resilient countries from the political risk perspective, again, I would treat as a good part. Hopefully all this transformation will happen for the benefit of future more stable development of Lithuanian economy. And we as a part of that will operate in more stable environment. So yeah, with that, I'll answer this question.
Thank you very much. Let's continue. Is there still a blockade in effect from China towards Lithuanian companies due to Taiwan issue, or has it been somehow resolved? Does it have an effect on Šiaulių bankas customers? Thank you.
Probably I would not have had the best expert in that describing the development of the blockades with China, but from the practical point of view, I don't see any major impacts on the client behavior. Most likely, clients has used to the number of challenges and issues and flexibility of Lithuanian businessmen allows to reorientate and to shift fast and to find solutions. Therefore, it has not transmitted to any risks for the bank. And of course, the overall environment due to the invasion of Russia to Ukraine has changed, and much more, larger issues and larger risks appeared. But that's that question has, as I know, remained not too much changed from the escalation of the situation several months ago. So far, I would not say that it impacts anyhow banks' activities negatively, but the question is not resolved, and everybody probably observes situation how this topic develops on the inter-country level, like states, China and Taiwan. Yeah.
Thank you. Could you please provide any estimates on growing dividend payment next year?
Sure. Yeah. So I remember what I mentioned, and we during our webinars mentioned earlier that we were ready probably for more favorable dividends for the year 2021. We restrained due to the war. Again, from today's perspective, there are some rooms to be in line or above the dividend policy ratios, but it's this decision to be taken in the beginning of next year. So then we will have to put into the mind all arguments against and in favor of level of dividends.
Thank you. Let's continue. Are your customers ready for higher interest rates? And do you expect any increase in the NPLs as rates rise?
The first part of the question, how to say, would smile because, of course, depositors are ready for high interest rates. What really concerns our borrowers. So, of course, it depends on the health of them. Some weaker ones, probably it will be more difficult to meet this growing financial pressure. But of course, everybody, sound businessmen should evaluate the risk that this low interest rates era will not continue forever. And yes, I agree that some NPLs could appear due to the high interest rate, but again, so this trend of diminishing NPLs ratio will not last forever until zero. So some opposite trend could be happen in the coming quarters.
Thank you. Could you please comment why aren't deposits growing faster and why are national deposits declining as a portion of the nominal GDP?
Again, two questions. First is for Šiaulių bankas, we were not, putting any measures to encourage deposit growth, because the level of deposits was in surplus earlier. Now we are reaching the balance. And as I mentioned during the main presentation, we will probably put some steps encouraging growth of deposits for Šiaulių bankas in the future. Regarding national level compared to nominal GDP, so my assumption is that everybody see that inflation, obviously, takes all interest that was available. Of course, there are very small number of these interests, and therefore they prefer to spend them buying some investment into real estate, shares, and only very conservative people, they prefer to keep in the balance in the bank accounts when the interest rates are close to zero. But that trend probably could change in the coming quarters.
Thank you very much. Could you please comment who are you taking the market share from and how your competitors are responding to that?
Good question. I would say this is the different trends in different client segments. So I would say if we talk about corporate side, so first of all, we already have rather strong market share, close to 13%. So it's already, I would say, competitive position with the largest bank. Therefore, we would need to look to the different specific sector in the corporate lending, how we compete, and from which particular, with which banks we are making the toughest competition. So in different sectors, we have some different competitors, but mainly this is the 3-4 main banks that we are competing on a corporate side. And that's the development of a market share is slow. We're still growing, but it's when you have already a larger base, it's much harder to grow. When we talk about mortgages, I would say the market was favorable to grow. The last few years, there was a very high demand of a mortgage loans. And we have built infrastructure needed for that. So systems, employees, products. And due to that, we've been able to, using our whole network, to rather fastly to jump on the close to 20% new sales market share. And that allowed us in 3 to 4 years of becoming more and more active in this market to gain a 5% market share. So it's a bit different story, but the main competition with the mortgages is mainly with top 3-4 again banks as a competitors who are providing the service. When we talk about modernization or other loans, so there's again a new story, another story, and modernization is quite unique product financing tool that we are providing. Therefore, it's just successful work with those projects, and the competition is pretty weak in that field because it's much more specific to our know-how that we've gained during the number of years. And a consumer financing is again a slightly different segment with the extensive number of smaller players, smaller specialized institutions in consumer lending. Therefore, again, to have strong growth in that field, probably either we would need to reduce strongly either pricing or risk level should be changed. Another option to grow faster is the acquisition of a portfolio. So I would say that would be an option to make more extensive growth in consumer lending.
Thank you very much for your answer. Could you please explain what is the regulatory capital level requirement?
Yeah, during presentation, I mentioned this risk appetite figure, which is 17%, and which is based on the regulatory requirement capital plus some buffer for in order not to enter into the problem zone. But this regulatory requirement consists of the different kind of buffers. So pillar 2 regulatory requirement, also pillar 2 guidance requirement buffer. Therefore, so it's quite technical, and I would prefer to keep this figure which contains all regulatory requirements plus small buffer from the management in order not to enter into danger zone. And this is the sum of all these buffers is 17% currently, and I don't see any possibilities that it could be released, could be decreased in the future. Quite opposite, it could be the case.
Thank you very much for your answer. Another question would be, could you please explain poor result from trading operations? 4.4 million euros were generated by the bank solely, but close to 0 euros by the group. What trading results are projected for the second half?
Yeah, it's a difference between bank level and group level. It could be explained by the activity of our insurance subsidiary, and particularly unit-linked securities, which means that customers, they take risk of share value volatility. So the result from the share value decrease is of this portfolio is disclosed into this trading operation result, but exactly opposite figure is included into expenses related with the insurance activity result. And if we have negative figure in trading operations due to the share price decrease, we have positive expenses into this expense line. I don't know if this question we receive from different investors, but such disclosure is required by the accounting standards, and for the management reporting, we exclude this portfolio, which net result is 0. So I would be happy to provide other additional information for Arvidas or other who ask these questions after the session.
Thank you very much, Donatas, for your answer. Let's continue. Another question would be, could you please elaborate more on ETFs that have included SEB shares into their portfolios, their geography, names of these ETF providers, and what is the size that they have in SEB capital?
Yeah, I probably will not go into the disclosing the real names. They are free to do it themselves. Some of them already we noticed from the Bloomberg that they have disclosed their names, but this it's a signal. It's not significant percentage in the range of 1% or so of bank capital, and these ETFs are mainly or only for frontier markets, related with the frontier markets where we are operating.
Thank you very much. Let's continue. We still have quite a few questions remaining. And the next one would be, do you have any plans to pay dividends from 2021 profit as semi-annual dividends this autumn, or rather it will be added to the dividends from 2022 profit?
Second alternative, according to legislation in Lithuania, we are not allowed to pay semi-annual dividends, so it will be added to the next year dividends, if any.
Thank you for your answer. Another question would be, are fees or lending related to Lithuanian railways and transit to Kaliningrad a material part of Šiaulių bankas business?
Yeah, probably there's no need too much to comment on the interaction with the client in details, but the answer would be that this is a very material level of income to the bank from this group of clients. So this is the very, very small numbers.
Thank you. Andrei is congratulating you on great results and asking if he understands correctly that the bank's targeted capital adequacy ratio is now at least 17% compared to 15.5% target some time ago.
Yes, thank you for congratulations, Andrei. So you are right. So due to the regulatory requirements increase, so this level of targeted capital adequacy is increasing, and right now stands at 17%.
Thank you very much. Following the negative Q2 GDP change, are you planning to adjust your medium-term macroeconomic risk inputs, potentially leading to another round of extra loan provisions?
Shall I? Yeah, we are updating this forecast every quarter. And the latest adjustments that were released when we had to confirm these parameters for the second quarter provisions, so were put into the model. And after 3 months, we will continue this exercise and we'll take into account our latest available data from the mainly Bank of Lithuania that we take as a obviously main source of parameters input.
Thank you for your answer. Another question would be from Dinas, and his daughter complains that there is no option to pay by phone. And when do you plan to offer this opportunity? And what is your opinion whether Šiaulių bankas lags behind other banks in terms of service offering? Thank you.
Yeah, thank you, Dinas, for the questions. I'm happy that your daughter chose Šiaulių bankas services. Yeah, this is a good question in our plans. It's in our pipeline. So as just to remind that we upgraded our mobile application, and the features that we thought are critical there are in the application. But the payments by the card is a new functionality that we are working on. So as I mentioned, it's in the pipeline, and we're expecting at the beginning of next year to provide this functionality to the clients. On the our strategy is to implement the tested solutions that already has been proved that it's working and it's needed for the clients, and then we implement them in our systems. So that could be the answer to the next part of your questions. And through the client service and well-functioning instruments, we expect that the clients will like them and the complex good service and up-to-date solutions.
Thank you for your answer. So the next question would be, your first half of the year was very good, but the market share remains almost the same. How do you see the future? Are there possibilities in Lithuanian banking market to grow more than the market?
Yeah, thank you for the question. One technical observation that the results for the market share is based on the first half results. First quarter results, not the first half. I would expect that in all financing segments, seeing our growth for the second quarter, we would gain market share, both in the consumer lending, mortgages, and corporate lending. That's my assumption. Let's see how the market will actually show the figures, how it has developed. And if we take historically, number of years, probably 4 or 5 years, our growth was faster than the market. And we are gaining market share from the larger players. So I think we're still in the position to continue this trend due to our flexibility, due to our localness to the market. Of course, the larger you became, the harder to make a much faster growth. But I think we still have a good fundamentals to keep on higher growth than the market.
Thank you for your answer. And one but last question would be, if and when a time will come for Šiaulių bankas, when the bank will become innovator and disruptor, but not just copying other and chasing them?
Good, strong question. In the environment where a number of new banks appear and new disruptors declare themselves as the neobanks and the players who are willing to change the service provision to the clients. We are 30 years in the market, therefore we have our strategy, our focus, our historic relations to the clients, but we're innovating, and in some fields we are doing things that nobody does, like a modernization program, so like a client service quality. So that's the areas we are focusing. The same by corporate lending. For some clients, we are a good solution to work with, and probably not all of them are willing to deal with a disruptor bank. But the life is very dynamic, and this period we need to be proactive to the changes, and we are by developing our solutions, whether it's channels or it's products, we looking to all the things that has happened in Lithuania and around. And as I mentioned already, we are trying to be rather fast in the market to present the products that are interesting for our clients. But we have never said that we will be innovator in all the universal bank solutions. So we're selected, we have a strategy, and probably that's one of our success, that we are generating good return, being focused and not to investing too much to 360, opportunities.
Thank you for your answer. And it seems that the last question for today is, your minimum capital requirement was 12.6% in Q3 of 2021, and your risk level at 15.5%. So has the regulatory capital level requirement increased since then by 1.6%? Otherwise, it seems you have 137 million euros of spare capital.
Thank you. Again, I turn my video in advance, so it's again for me, but I see the capital it's becoming and probably will remain for the coming quarters the hot topic. I'm happy that the investor follows very closely figures, and yes, you are right about the historical level of capital requirements and this gap what was between the regulatory requirement at that time and our capital level acceptable. And yes, you are right in the sense that the regulatory capital requirement increased since then, and it's increasing as when we step into the ECB direct we became supervised by ECB, so it's how to say permanent topic, reviewing the levels and introducing one buffers, changing level of other, and etc. So, for example, recently a new buffer for mortgage loan portfolio were introduced, and the size of this buffer depends on the portfolio size in mortgages. Therefore, as we are becoming active players, so this buffer also tends to increase. Also, Pillar 2 required buffer is reviewed every year, and due to the environment and the view of regulators, so it's also tends to increase every year. So yeah, it's the last part of the statement that we have spare capital. It's not here, so we don't have such huge amount of spare capital, unfortunately.
Thank you very much. And it seems that we have another last question, which would be as following. Your market share is getting closer to 10%. What is the threshold crossing which will trigger more intense competition, in your opinion?
Yeah, interesting question. I would say that it's not mainly about the market share you have. It's more about the growth that you can experience having larger market share. So when you are close to zero and you have opportunity to grow and all the things needed to compete, then your growth will be extremely high. But when you have already market share 10, 15, or even 20%, then the growth or maintaining the market share becomes probably another task, how to work with that portfolio of the clients. So I would say it's more like the size you are in the particular segment, and the other one, it more depends on the particular segment, because competition dynamics in a consumer lending, it's a bit different than the competition in the real estate development segment. Therefore, yeah, I would not name kind of threshold in which the competition profile or landscape changes. Thank you for the question.
Thank you very much, everyone, for joining the webinar today. On behalf of Šiaulių bankas and Nasdaq Vilnius, we thank you for all the questions you had for the management. The recording, as always, will be available in the company's website and Nasdaq Baltic YouTube channel. Dear guests, thank you once again, and have a good day, everyone. Goodbye.